Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. Let's quickly begin with markets at close this afternoon. Joining me is Suyash Maheshwari. Suyash, markets ending in green?
Yes, Shweta. So markets extended their winning run to three consecutive sessions now. And even though the markets closed near its intraday high, the benchmarks were seen facing some sort of exhaustion at higher levels as Nifty faced some resistance at around 19,580 mark, its previous peak, which it touched on August 24. Now, however, on the bright side, the benchmarks did not see any major pullback, and Nifty managed to defend 19,500 level throughout the session. Today's real winners, Shweta, were the mid-cap and the small-cap indices. Both scaled fresh peaks. Nifty Midcap 100 surged past the 40,000 mark for the very first time, and it also managed to close above it. Nifty Smallcap 100 on the other hand also surged around 1%, and it managed to scale a new lifetime high of 12,700. Now the rally in the broader markets has also improved the overall breadth of the markets, as nearly 2 stocks rose for every one that fell.
Okay.
Also, one of the things that we need to point out is that the volatility index, which is called India VIX, has seen some sign of moderation. It fell about 1.34% in today's session, which in the short term could augur well for the bulls.
I don't see any change in sensex. Not sure if that's a technical error or with markets closed.
It's a technical error.
Flattish there.
Yes. So Nifty closed about 0.24% higher at 19,574 levels. Sensex was up 0.23% at 65,780 mark. Midcap 100 closed 1.06% higher at 40,253 levels, while the small cap index was up 0.84% at 12,656 levels.
All right, let's also quickly understand from you the top gainers and losers before we delve deeper into the phenomenal performance of Midcap as it astounds you or also astounds me, and we were discussing this right before the show started. But let's quickly first understand gainers and losers. And the triggers, of course, for those gainers.
So, Shweta, among the top gainers in the blue chips today was Apollo Hospitals. Now, Apollo Hospitals yesterday said that it will be adding about 3,000 more beds by the end of this year in its real-time monitoring program. Currently, it has about 1,000 beds. So, it was a major boost for the stock, and as a result, the stock rallied about 3%. Coal India continues to be among the top gainers for the second consecutive session after it saw a 13% bump in production in August. Sun Pharma was another stock which performed fairly well today. It was up about 2%. BPCL and ITC also ended with gains of over 1%. Now, among losers was Ultratech Cement, which fell about 1.5%. Dr. Reddy's, which was down about 1.4%. SBI Life, which fell about 1.3%. Maruti, which touched its all-time high yesterday, fell about 1%, and Eicher Motors, which was on about 0.73%.
All right, let's also quickly talk about sectors that were in focus this afternoon.
Yes, Shweta. So most of the sectors, now Nifty Media was the outperformer in today's session. It was up about 3%. And Realty Index also performed fairly well. It was up about 1%. The dampener in today's session was the Nifty Bank Index. The index has been facing some resistance near the 44,600 mark level, from which it has seen like selling pressure taking off. Nifty IT performed fairly well. It was up about 0.63%. It continues to do well and building on the gains of about 4% in August. Nifty Auto ended flat and it was down about 0.01%. FMCG and pharma stocks also performed really well. Nifty FMCG was up about 0.74%, whereas the Nifty Pharma Index was up about 1.1%.
All right, let's quickly understand some of those performances better. Joining us is Kranthi Bathini of WealthMills Securities. Kranthi, good to have you back. Let's first understand, markets ending once again in the green. What are the big triggers?
Yeah, Shweta, markets are trading in a very tight range right now. Of course, it's a positive momentum. Markets are in a consolidation phase right now, what we can see. But the more about the action is right now in the mid and small cap stocks. And also, Shweta, the interesting thing is there is a 2-digit factor that's playing in the market. Stocks which are in the 2 digits, they have been jumping in last a couple of trading sessions. So there was some kind of fringiness that is building up, chasing in these kind of low value stocks. and also some kind of bottom fishing is happening. Stocks which have not moved, which have been laggards for quite a long quarters, we can see some kind of bottom fishing is bargain hunting is taking place at this point of time. It's the nature of the bull market. Whenever markets tend to be on a higher note and shows its resilience, and when the markets are at a resistance zone, we can see some kind of activity taking place in mid and small cap stocks. That's what we are witnessing at this point of time right now in Indian markets.
Kranthi, of course, today's story has been the Nifty Midcap 100 scaling its fresh peaks of 40,000, and we have been talking about the outperformance of the broader markets in general. Now, if you look at the one-year returns, Nifty Midcap 100 has given about 27%, small cap index is up about 100%. The headliners, on the other hand, are up about 7%. So, do you expect the divergence to close anytime soon, or will the outperformance continue?
What we can see is if the Nifty is could able to sustain about the higher range, we can see this kind of outperformance in the mid and small cap stocks going to be continued for a period of time. Uh, and it's a nature of the market. When there is a the limited upside is there in the large cap stocks, then the money flows can go to the mid and small cap stocks. That's the tendency of the market always. And also we need to look at the data. Uh, Surprisingly, in the last 6 months, the foreign portfolio investors have been buying in the primary market also, which we have not witnessed any kind of strong IPO names in the recent past. But whereas the mid and small caps also, some kind of money is getting channelized in the primary markets. Uh, if you see the broader indices, the foreign portfolio investors again in the emerging market space, they have been the net sellers in the entire emerging market space, whereas in the month of August, for FPI money has been positive in India. So we can see the strength, underlying strength in Indian markets. When some days when the foreign portfolio investors are net sellers, the DIs have quite active. So there is a kind of strong liquidity that is protecting the market. Buying interest is emerging at every dip in Indian markets. So when the broader base is quite strong, we can see the money flows getting channelized into the mid and small cap stocks. Here, the catch is one need to think about the stronger ones, because it should not be the case with every stock in mid and small cap space. If the earning visibility and also the management strength is there, then that are the pockets one need to be there. Otherwise, if it's becoming very fringy and the valuations are astronomical, that is the time one need to be cautious in mid and small cap space.
So, talking about being cautious, Kranthi, what are some of the sectors, at least in the mid cap and the small cap space, that appear to be at least overheated for now?
At this point of time, we can see some kind of visibility with respect to the earnings are concerned. Uh, at this point of time, we don't see any kind of bubble forming situation at this point of time. It's purely we need to sensitize into very stock specific. At this point of time, majority of the stocks are trending at a fairly valued zone. We have not seen anything forming a bubble kind of situation at this point of time.
So, any sectors that can, be contenders for a re-rating, given that earnings are improving?
Yeah. The one of the key sector we need to see for a re-rating is the infra space, because the capex has been increasing, the government spending and the private sector spending has been going up, the engineering and the defense space has been buzzing, and this week we are witnessing stocks in the metal space also buzzing at this point of time. They have been exhibiting their strength in terms of the price momentum is concerned. So the infra was a majority of the last few quarters, they have been laggards, but right now we can see some kind of pockets of infra stocks has been rallying in the recent past. So infra is the space we need to wait and watch at this
All
point
right.
of time.
And apart from infra, one group of stocks that also are giving great returns at this point in time are railways stock, including the Railway Finance Corporation, again at an all-time high this afternoon, closing almost about 8% up, if I'm correct on
so
the
in the
numbers.
last 3 days, the stock has rallied 40%.
40%. That's a big number. Of course, a great push for infra, for railways, and a capex that has been set aside by the government. All of that is turning into positive sentiment.
Absolutely, Shweta. Any stock that have a tag of railway, they have been rallying in the market. And in fact, some kind of people are running screeners. So what are the companies that are related to railways, and what kind of momentum we are going to see? Whether this company can take the advantage of the growth or earning visibility, order book that is trying to build up in railways. Uh, the screeners are running. So such a kind of fringiness is there in the railway stock. Of course, at this point of time, the stocks are fairly valued, and what we can see is the visibility of the earnings and the order book is quite strong. So in line with that perspective, we can see some kind of price momentum is building up with respect to the railway stocks are concerned. But I can articulate like this, Shweta, it's just like a musical chair. The stocks are in a momentum zone. Okay, so the investors need to think uh, uh, by the time the music stops, where they will be and which stocks they will be in railway space is concerned.
Okay, and
Now,
since we are since we are talking about railways, let me also quickly bring in coal into the picture. Coal stock has been doing well day after day. All of that also, of course, on the back of the fact that there is increased demand, increased production. I'm not sure climate activists are going to be very happy about that, but that is the reality.
Yeah, Shweta, you are absolutely correct. There was a ESG concerns earlier. So when the bull market is quite strong, the money always check for the bargain hunting. That's what the beauty of the markets, beauty of bull markets. So the stocks which have been laggards because of the various reasons, okay, they tend to participate in these kind of rallies in a typical bull market is concerned.
Now, Kranthi, since we are talking about all sectors participating in the recent rally, one of the sectors that has not been participating is the Nifty Bank Index. Now, what's the overhang on Nifty Bank? It has been an underperformer for the past 2 or 3 months, I suppose.
Yeah. What we have witnessed is the banking at the forefront. It's already priced in, and majority of the PSU stocks have been buzzing in the recent past. Whereas coming to the public sector, private sector banks are concerned, they are priced in, and they are in a consolidation phase right now. The money has been, they are fairly valued in terms of their valuation, price to book valuations are concerned, and the credit growth is taking place. They are going to join the party if the sustainability of the indices reaches on high. They are going to start the party. But right now, what we are witnessing in the market is the money has been channelizing, getting into the more about the bargain hands rather than the stocks which are fully priced in at this point of time.
Now, Kranthi, the volatility index India VIX has also come down by about 1.34% in today's session. How do you see volatility coming down? Will it augur well for the bulls or for the bears?
Yeah, that's a very interesting question at this point of time. But as long as Nifty could able to sustain the range of 19,500, and if it consolidates at this point of time without creating any knee-jerk reaction, we can see the volatility to be in a lesser range. But where the volatility come into the VIX index, the fear index will come into the picture is any kind of some kind of adverse news or the Federal Reserve action. These are the news can create the fear index to go up in the near future. But Indian markets are in a comfortable situation at this point of time. The markets have been ignoring the trends that are getting created, the tremors or the news that are knee-jerk reactions that are coming from China. Also, market is pursuing right now in favor of Indian markets at this point of time.